Well, joining me now for more on what to make of the recent action is Nick Yeomans. He's president at Yeomans, your retirement coach. It's great to have you on the show this morning, and of course, some decent gains, Nick, here at the Open. What should investors make of this bounce?
I think right now we're in what I would say is Wall Street waltz. It's going to be two steps forward, one step back. And I think just the wisdom of the market today is recognizing 64% of the time we're going to have 10% or larger drawdowns in the market. So I think the play today right now is be cautiously optimistic, but defense sometimes does win the game.
Interesting. How would you describe defense in this sense when it comes to the current market action?
I think right now, it's a great opportunity to identify those asset classes that have been just so high and so highly valued over the last 5, 6 years. Such a great opportunity for new money to look for the opportunity. However, if you've made a lot of profit over the last 2 years, I think it's a great idea to preserve and protect. So taking money and looking for lower duration bonds and fixed income as an example, or even cash that's paying north of 4%, there's nothing wrong with protecting profit. And I think that's where a lot of people, we're trying to use emotion and we've got so much uncertainty around what's going on in the market. We have to remember the market is driven by two things: liquidity and certainty. And we haven't had much of that this year.
Yeah.
So to have that defensive posture, I think is a great idea.
So it sounds like you are still near term, maybe even medium term bullish on this market, Nick. Is that the case?
It is. It is. I think, especially looking at the tech sector, it got crushed, but there is so much room for advancement. I mean, with AI and how it's moving right now today, there's some great brand names that I think are really on sale. I mean, even taking politics all out of it, I mean, Tesla's down, was it 9 weeks in a row? That's just crazy to me. So I think that there's a great opportunity for buying, especially if you're okay playing the long game and looking at those brand names.
Yeah. So, but let's talk about volatility because, of course, this April 2nd deadline does still loom. We won't get it until next week. Originally, we had seen some tariffs on pause expected to resume. Then, of course, President Trump saying there might be some flexibility here with reports earlier this morning, at least pre-market, that the tariffs might be narrower in scope than previously reported. How should our viewers prepare if these tariffs do go through in terms of what downside we might see in a choppy market like this?
Yeah. A choppy market or lots of volatility, we have to remember that's for the professional investor, that's like Christmas time. You're able to identify these great values. It's Black Friday season. And so if we're going to look at the threat of tariffs and tariffs are coming and going, what that's really doing is moving the market in such a way we can find those opportunities to buy and be very, very strategic, very, very intentional. I think the real risk is for the retail investor to haphazardly just buy everything in the market without the intention behind it. So let's look for the opportunity. Let's look for, again, those big discounts driven by tariffs or threat of tariffs. But a day like today, we're going to celebrate, and hopefully we made some great buys to receive this current bounce.
Interesting. How does Fed policy factor into this? We had heard from the Fed chair last week, and the markets did initially receive it positively, that they weren't necessarily in a position to lower rates right now, but that they do stand prepared if in fact some of the damage from tariffs is not temporary.
Yeah. So again, I'm going to come back. The market is driven two things: certainty, and we're not getting a ton of certainty with the tariffs, and then liquidity. And we've got really expensive money, a lot of dry money right now that's out there, and the markets are not going to respond well until I think we do see that rate cut. And I know the markets are looking for it. I'm looking for it. But I would say until we see some ease and more liquidity enter the market, it's going to be a slower go than what we've seen over the last few years.
Nick Yeomans, president at Yeomans, your retirement coach. Thank you so much for joining us from Georgia.
Glad to be here. Thank you.